You might be making a huge mistake with gold right now. Most people do. They see gold prices rising and panic buy, or prices drop and they sell in fear. They never win. But what if I told you there are 5 specific signals that separate smart gold investors from everyone else? 5 signals that tell you exactly when gold is actually worth buying. Let me ask you something. When was the last time you bought gold at the right moment? Not too early, not too late, just right. Most people can't answer that, and that's why most people lose money on gold. But here's the thing, you don't have to be most people. There are 5 signals, and once you learn them, you'll see gold completely differently. The first signal is geopolitical tension. Think about it. Every time there's a war, a trade conflict, political uncertainty, where does money run? Gold. It's the safe haven. Governments buy it, billionaires buy it, regular people finally start paying attention to it. But here's what most people miss. You don't buy gold after the crisis hits the headlines. By then, prices have already jumped. You buy before. You buy when tensions are building, when you can feel something's wrong but the mainstream media hasn't made it a story yet. That's when smart money moves. That's when prices are still reasonable. Second signal. Inflation expectations start climbing. I'm not talking about when inflation is already here, destroying your savings. I'm talking about when economists start warning about it, when the Fed hints at policy changes, when job numbers come in hot, when energy prices spike. These are the early warnings, and that's when gold starts looking attractive. Because gold does one thing really well. It protects you when money loses its value. Third signal, and this one's huge. Central banks start buying gold. This isn't random. Central banks have access to intelligence we don't have. They see economic data months before it reaches the public. When the People's Bank of China announces another gold purchase, when the ECB shifts strategy, when other countries start diversifying away from dollars, that's a signal. That's them saying, we see trouble coming, and smart investors follow what smart money does. Fourth signal. Real interest rates turn negative. I know that sounds technical, but stay with me. Real interest rates are the interest rate minus inflation. When inflation is higher than what banks pay you, you're actually losing money holding cash. Gold doesn't lose value to inflation the same way. So when real rates go negative, gold becomes the smarter choice. It's not complicated. It's just math. Fifth signal. Bond markets show stress. When bond prices fall and yields spike, when credit spreads widen, when financial institutions start reporting problems, these are signs the system is under strain. And historically, when bonds struggle, gold typically strengthens. It's the opposite trade. It's the insurance policy that pays off. So here's what I want you to do. Look at where we are right now in the market. Are geopolitical tensions rising? Check the news. Is inflation expected to accelerate? Look at Fed projections. Are central banks buying gold? They announce this publicly. Are real rates negative? You can calculate this yourself. Is the bond market showing stress? It's in the headlines. Count how many of these signals are flashing green right now. If it's 2 or 3, that's your signal. That's when you consider a gold position. Not when everyone's panicking. Not when gold's already up 50%, but when conditions actually favor it. This is how wealth is built. Not through luck, not through timing every market perfectly, but through recognizing patterns and acting when the odds are in your favor. So watch these signals, know them, and when they light up, you'll know exactly what to do.